This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The world's biggest banks cut lending to fossil fuel firms by 9% in 2020 as a result of the pandemic, although funding has still risen over the past 5 years, a report showed on Wednesday. The 60 largest banks lent more than $750 billion to 2,300 fossil fuel companies in 2020, down from $824 billion in 2019. According to a report by Rainforest Action Network, Reclaim Finance, Oil Change International and other non-governmental organizations, NGOs. But the report said the fall, driven by record low levels of industry investment in the second half of 2020 as the pandemic hammered fuel demand, followed annual rises of 4.4% to 5.5% since 2016, the year after the Paris Climate Accord was signed.
The deadly coronavirus wave that has torn through Brazil in recent weeks has not spared its oil industry, according to unions and government data reviewed by Reuters, with infections among workers jumping and production taking a hit. New COVID-19 cases among offshore oil workers rose to 46 on March 24 from 17 on March 3, based on a 15-day moving average, data from national oil regulator ANP showed. Active cases are at their highest level since December at Brazil's largest oil producer, state-run Petrobras, with 294 cases among employees as of Monday, according to Mines and Energy Ministry data.
Moving on to the top news in the energy sector.
With oil prices making steady gains earlier this year, OPEC and other producers had hoped to ease output cuts. But industry sources say a fresh wave of lockdowns around the world threatens to tear up those plans. The OPEC Plus group of producers, which are holding back millions of barrels of daily supply, surprised the market on March 4 by deciding to hold output broadly steady. Russia and Kazakhstan were allowed to pump a small amount of oil more. But Saudi Arabia's energy minister Prince Abdulaziz bin Salman Al Saud stood firm, citing a return to lockdown in Milan as one of the reasons.
African nations could play a central role in efforts by India to diversify its sources of oil and gas, India's oil minister said on Wednesday, as the nation strives to reduce its energy reliance on the Middle East. India, the world's third biggest oil importer, has asked state refiners to speed up the diversification of oil imports to gradually cut their dependence on the Middle East after OPEC Plus decided earlier this month to largely continue production cuts in April. As India seeks to further diversify sourcing of crude oil and LNG, Africa has a central role, largely due to its proximity and absence of any choke points in trans-shipments, Dharmendra Pradhan told an industry summit. India imports over 80% of its oil and has a huge oil import bill.
Next, we have the top news in metal markets.
China's iron ore futures rose for a second straight session on Wednesday, recovering from what some analysts viewed as an exaggerated sell-down in reaction to anti-pollution output curbs in the country's top steel-producing city of Tangshan. The most traded May iron ore on the Dalian Commodity Exchange climbed 2.8% to 1,053 yuan, $161.43, a ton by 0700 GMT. However, the front-month April contract on the Singapore Exchange dropped 0.7% to $154.05 a ton, after a 2.6% gain in the
Gold edged up on Wednesday as U.S. Treasury yields eased and the dollar backed off slightly from a 4-month peak, loosening its grip on the safe haven metal, which also benefited from worries over COVID-19 lockdowns in Europe. Spot gold rose 0.1% to $1,728.83 per ounce by 10:21 a.m. Eastern Daylight Saving Time, 14:21 GMT. U.S. gold futures gained 0.3% to $1,729.90. Benchmark 10-year U.S. Treasury yields eased to their lowest in a week, reducing the opportunity cost of holding non-interest-bearing gold. We will now look at the top news in the agricultural sector. The U.S. Environmental Protection Agency said on Tuesday it was finalizing a proposal to extend the deadlines for oil refiners to prove their compliance with the nation's biofuel blending laws for the years 2019 and 2020. The agency said refiners now have until January 31, 2022, to submit compliance documentation for the 2020 year, while small refiners have until November 30, 2021, to submit their documentation for the 2019 year.
That is all for today's news on commodity market. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.